Set for Forex Trading Unlocked, and we are here on July 14th, 2022 with a Forex and crypto market currency trading analysis for you. Before we get into everything, we just want to show you our disclaimer to remind you that this is for illustrative and educational purposes only. Everything here is in a little bit of a delay, and we are discussing trading ideas, but we are not trying to instigate anybody to do anything. It's all about learning and asking all kinds of questions and growing as traders together. So with that, no further ado, I will now put up something here for you. If you haven't done so already, please make sure to hit that like button and that subscribe button if you're on YouTube or Twitch or Discord, which, oh yeah, by the way, Discord, I gotta make sure that I have the viewer going on. You guys don't have, sorry guys, I'm just making sure that Discord gets the video going. And it's not going, of course not. Why would it? Sorry guys. Alright, well, we'll get back to that in a second. Alright, so without further ado, alright, now I know you guys can see me on YouTube and Twitch, at least. And remember, if you have any questions as we go along during this analysis, to please leave some questions, comments, criticisms, whatever you want. And why am I not getting... Okay. No. I don't get it. Alright, oh well. Trying to get Discord to work properly, but it's not. It's been not the easiest of weeks for streaming. Sorry guys. Alright, so we have the www.forex-trading-unlock.com website pulled up. We have some numbers coming out tomorrow. We have Michigan sentiment and a couple other ones that will be ending the week's economic numbers. Alright, so as we know, the dollar index has been spiking higher today. It's definitely off and running once again. The past couple of days, it's been making slightly higher highs and then trying to sell off. We had some corrective targets, which are down here around this 106 to 105 area. I think that if we have a correction, this is the extent to what you're going to see for a drop in the dollar index. Otherwise, it's pointed higher in a big way. And one of the reasons why is the euro today, now even though it is now come back and is in the upper part of its range, it pumped pressured new lows again, so that helped to push the dollar index to new highs. The British pound and all the other currencies as a whole are also leaking against the dollar. So we have a corrective area for the euro US dollar. However, right now it doesn't really seem, well, one, we don't have a buy signal in any manner, shape, or form. And with the way the economic numbers have been coming out, with the way PPI came out today, and then also we have retail sales tomorrow, odds are that number is not going to be encouraging. And even if it isn't, today's PPI number sets us up for an even worse CPI number coming up next month. And even not just next month, but for the next few months going through the third quarter. So these are all things that are going to put pressure on interest rates, where no matter what the Fed does, the market rates are going to be pushing new lows. This will also help to support the dollar. So it's not that the dollar is so strong right now. There's just so many fundamentals in place, and with the current action being done by this, the U.S. Fed central bank, there's no reason to think that they're going to change their tune, and this is also giving support to the dollar. And it's not that they're trying to support the dollar, it's their actions that are doing so by default. So let's see, do we have any questions out there? I know on Discord we can't get any questions because who knows where we're going here. It's for some reason I can't get... Oh, there we go. Alright, now we got you on Discord. Alright, sorry guys. Finally we heard that beep. That means that we are now live on Discord. Alright, so for those of you that are out there in Twitch and YouTube land, thank you very much for your being patient with us as we get this stream going. It's been a nightmare trying to get these things working right this week. So, alright, so the Euro US dollar. Are there any of you out there trading the Euro US dollar? If you are, if on Discord, chat, or YouTube, or Twitch, please say something and let us know what you think about the Euro US dollar and the current slide that's going on. The trend definitely is locked in place right now. Europe is a mess. If you watched my spot on tfnn.com yesterday, every Wednesday, almost every Wednesday, I'm there at 8:40 Central Standard Time for 10 minutes. We discussed how much of a mess Europe's in, and they've also had that with other people on their shows. It's not looking good for the European economies. This really is going to add, I think, to the bearish pressure for the euro. It says sell rally mode here on the chart. That is exactly what is going on here. It's not going to be a fun third and fourth quarter. I think that once we get to the end of the year, it's very likely that the news coming out of Europe economically is going to be very poor. The odds of the euro bouncing with a correction right now, anything can happen. I would say this 103.83. If we get a correction, this is most likely the extreme. This downward channel here is a very decent slope, and we're more likely to buffer to lows than we are to bounce back up to highs. If anything, by attrition going sideways is where we might bump into a trend line. As far as a target, here's our upside risk, and I think that no matter what, it would only be a correction unless there was some major turn of events in the economies around the world. Long term, I think that it's very likely that by the end of the year, we'll not only touch the 95-cent area in the euro, which we could be there with the way things are going before the summer's out. I think we could be down at 90 cents, maybe even touched 88 to 87.5 before that we close out 2022. This would be a markedly huge depreciation in the euro in a very short amount of time versus the dollar. It's not that the euro hasn't been at those levels when it came out. It was at lower levels. But then remember that the euro also was up at 160 not that long ago. So for it to retrace virtually all the way back to where it started when it first came out, when the D-Mark and everything else were no longer the base currencies, this was something that over time the euro had become very strong, and there's lots of reasons for it. Their fiscal policies, or what was their fiscal policies, but now I think the cost, you got to remember, they've been taking on refugees in the millions of people for over a decade now, between Syria and Afghanistan, and also from other places in the Middle East, as well as now you have the Ukraine, obviously. The burden on all these European countries is starting to come to roost. That it's not sustainable. It's not they can't afford it anymore. So especially in these times with inflation and rapidly escalating costs, I mean, the fact of the ability for these countries to take care of their own people is diminishing, let alone taking on people who are refugees. So you're going to have, I would think, a lot of civil unrest. I mean, I hope I'm wrong, but with the way the currencies are going right now, it looks like that's going to be the case. What would stop that would be us in the U.S. letting other central banks catch up and stop raising interest rates. This whole nonsense about raising rates to curb inflation is the most ridiculous thing in the world, but then again, that's why they call it economic theory and not economic law. So, but we'll see. Time will tell. Maybe I am wrong. So, but anyhow, going down to probably 95 cents over the next month and a half before Labor Day, I would say. British pound, U.S. dollar also giving a little bit of headwinds to the U.S. dollar strength. They made new lows also today. You can see that they're in the lower part of the range. Unlike the euro, they haven't bounced back as much. This market I don't think is as weak as the euro. I don't see it going to parity anytime soon. I do see it going to lower levels. Parity would be a stretch. Not that that cannot occur, but it's odds are with the way that the Bank of England is working. And you got to realize that now with this changeover with Boris Johnson, it's not changing the party in control. A parliament will be. This is not a vote by the people. Parliament will select the replacement in the interim before the next elections. But they're going to replace like with like, meaning that he's part of the Tory party, so it'll be someone from the Tory party. So now are they going to be a clone of Boris Johnson? Probably not. Are they going to have most of the same political leanings? Absolutely. They're going to represent the party. How this transition will pan out remains to be seen. We'll see over the next few months how they deal with the escalating inflation and other issues going on globally, especially the Ukrainian-Russian conflict, which they're involved with, but because they're no longer part of the EU, they have a little bit more discretion as far as how many refugees they'll take on and how much money they're going to donate, even as far as armaments and things like that. So, but anyhow, this market I don't think is as much as a bear. I think that this one could get a correction at least up towards this 120, 54.70 area with an extreme of $1.2129. I doubt we'll be able to get a correction above that currently. Excuse me. Is we have a Fed meeting that's coming out in a week and a half, and the thing you really got to figure out now is, are they really going to go for a full point? Is the street that's going to try and twist the Fed's arm? We know that a 50% hike is 100% factored into the market. Up until the CPI number of yesterday and the PPI number of today, the consensus was that there was, I think, over a 95% chance that they would do a 3/4 hike. Now, there's a lot of talk, and has been over the past 24 hours, about there being a full point. I think the market's pretty much factored in the 3/4 point. I don't know if it's getting ahead of itself on that one. It's irrelevant if they do a point or 3/4 of a point, because we know that behind this 1 3/4 move is another at least half to 3/4 move. So regardless of whether that 1/4% comes this Fed meeting or the next, is not really the end of the world, you know, because the overall long-term outlook is that we're still going to have raising rates for the next 6 months at least, unless, barring some turn of events and change in perspective by the U.S. Fed, which I don't see happening. They're not going to listen to what I say. So, but anyhow, so the British pound right now, we have our corrective upside levels. So how deep can this one go? Short run, I think that you have a good chance of getting down to about 117.20, 117.10. Below $1.17, it would take a really strong rally in the dollar versus all the other currencies as well for that to happen, I think. The euro, like I said, is more negative. I don't see the pound slamming new lows to the degree that you're going to see within the euro or even the Swiss. So let's see, do we have any questions on the chat out there? Let's see what we got going on. All right, we got a couple people here on Twitch, and we got a couple people here on YouTube watching. Got a couple likes. Want to say thank you very much. And for all of you viewers out there who are hanging in with us, and for today, we have a little gift for you. And this is free, costs you nothing. We're going to give you a free book, How to Day Trade for a Living. It's a very good book. It's a quick read. It's not overly complicated, yet it's still very good for both new and experienced traders. There's a couple of things that no matter what, everyone can either be reminded of or have take it from. So here we have on YouTube, I just put the link out here, How to Day Trade for a Living. I'm going to do it now on Twitch and Discord. This is for you guys, and there is no obligation. There's no have to give any emails up or anything like that. It's just a PDF that you're welcome to. And I mean, you could buy the book, and maybe you will buy the book. Even if you buy the book, I don't make any money off of it or anything. So, but I am giving you a nice resource for your trading arsenal, if you will. All right, so put that out on Discord as well. We don't have any questions right now. That's all good. All right, so British pound, we're gonna move on to the Swissy. Just remember that of the European currencies, I think that the pound is the one is the one that is not going to break the most, even though I believe the bear trend is going to continue. Also, I think if you're going to get any corrections anywhere, I would say that probably the strongest correction that you will have will be in the British pound. US dollar CHF, here we go. All right, US dollar CHF. So we were bouncing around. We had this critical area, and yesterday I told you how we had buffered up into our target zone. If this was only an upside correction, if this really is a bearish or a neutral to a bearish trade, we would put a cap on this market. Now we have definitely made a strong run through resistance. Besides making a higher move high, we're trading just below this upper extreme target of 98.45. This is something I think will continue to base and build and can trend higher. Remember, we have the numbers going on tomorrow for retail sales. A lot of what's been happening is you get a lot of pressure on the dollar, like especially for this point of the day, moving into the close of the American markets. And then overnight, you start to see the dollar strength come roaring back as you get into the Asian and European trading sessions. This is another market that I don't see not going back to parity. I think this time will be 3 times as a charm. Remember when we first tackled this parity barrier back on, was it May 16th? We made a higher move high, then we came down and had built this base, making a higher move low, and then started screaming back towards above parity, falling just below this recent high that was set back once again on May 16th. When we turned back to support, interestingly enough, we made a lower move low. So on a trend basis, even though the overall long term is a bull, higher move highs, higher move lows, in the intermediate term, we have a neutral trade that was confirmed when we went from a higher move low to a lower move high and a lower move low. Doesn't mean we're going into a bear trend. That's why yesterday when we were talking on the webinar, if this is a correction, this would give it, and then if the market would fall back, that would give us another lower move high, confirming weakness. We didn't get that. So, and I think one of the main reasons is that even though the Swiss are not going to be as restrictive as the EU is on with their central bank and with their ways of dealing with the economy, they're still on a similar path. They're not going to be as aggressive, as the U.S. Fed, at least right now, as it seems. So we will see how this pans out. But right now, unless they start to raise rates drastically, I think you're going to make a run for parity. And then even once they do, if they do start raising rates and they're above parity, it's going to be a tug of war with the U.S. Fed. So every time the Swiss will raise rates, it'll pull back, and then when the U.S. raises rates, it'll bounce back up, meaning dollar strength versus the Swiss. And sorry, my mouth is very dry this morning. All right, so we have a bull no matter what in the short run, intraday, daily. Obviously on the weekly, we've gone neutral. We're looking for an upside breakout. I believe that we are going to continue to trend higher. Retail sales number, I believe, will be the same song and dance that we saw here with the PPI yesterday, or CPI yesterday, and the PPI today. So, and if any of you have any questions about these economic numbers and how they pan into our trading fundamentals and how they help to drive the trend, don't be afraid to ask. I'll explain anything you want me to when it comes to that. So anyhow, once again, we do have that other number coming out tomorrow, Friday, to end the week. And remember that we're coming off a holiday week. We're still in the summertime, but now we have straight trading for the next few weeks with solid schedules, Monday through Friday. And the thing is that we're not winding down for a sleepy summertime trade. It would be, I would say, only when we have the 2 days around the Fed meeting that you probably might see a lot of sideways action in the market. Until then, volatility, I think, is here, and I think you really have to follow that interest rate fundamental when it comes to your guidance on this. And if that is the case, then we should see this market buffer up and get through resistance over the next few sessions. Now, I don't see us screaming up to and through parity. Excuse me, I see it being a really tough grind, but I would be leery of any corrective sell-offs right now. In the past few weeks, we've only been able to sustain a 2-day sell-off, which was this week, and we've already replaced all that trading action today, making higher move highs. Our range for today actually outpaces the range for the last 2 days now, pretty much. So we'll see. I believe that this little continuation that you're going to have here of piercing through resistance will probably last into the Fed meeting, or close to it. Then maybe we'll have a little pullback, and then after the Fed meeting, unless the Swiss do something with their rates, I wouldn't doubt that you're going to see the US dollar Swiss above parity, pushing the 101 to 101.5 area. So is there anybody that has any Swiss trades on or Swiss crosses, since we're talking about the Swiss right now? No comments, but we do have a couple more people viewing us now on Twitch and on YouTube. And we got a couple likes there. Thank you very much. If you haven't done so, hit that like tab. We appreciate it. It helps with the algos. And use the share button and share us out on the internet to other people while we're broadcasting. Really would appreciate that. Helps us with the algos too. So, all right. So the US dollar Swiss, we know we're definitely pretty bullish on that. If we were to take out this prior low, I can get rid of this green. That's from yesterday's webinar. So if it move this here to swing low from yesterday, if we take that out, it doesn't really make us bearish. It puts us into a sideways trade, which we're already in, but we could still come back to this 96.66 to 96.30 area. Very unlikely with us going into the weekend and with the forecasted outlook for the number for retail sales tomorrow. Odds are retail sales, it may not be a doom and gloom number, but I would expect there to be a contraction, if you will, in the number, and also the outlook moving forward, especially with PPI or CPI already exploding as a number, as an indicator, and also with PPI follow with that today. So, all right, now let's go to US dollar yen, and for transparency's sake, I am short the euro, short the pound versus the dollar, and excuse me, long the US dollar Swiss, and also the US dollar yen. Anyone that follows me knows that I've been long the US dollar yen pretty much every day of every week and month for the last, well, now going on almost a year. In fact, up except for this week and 4 other times in the past couple of weeks for a half a day or a day and a half. I have been net long. Those are the only days where, and I wasn't out, I actually got short. And so that was, outside of that, I've been net long this market forever. Not ever, but for a year. And my 140 price target that I didn't think was going to happen until probably the end of July, beginning of August. We're a stone's throw away today. If today's indication is anything of what tomorrow could be like off the retail sales number, we probably aren't going to make a run for new highs today anymore. I don't know if we will get too much of a sustained sell-off either. I wouldn't doubt that we trade around where we're at for the next 24 hours into the retail sales number, in which case then after that I believe we'll have an accelerated rally up towards 140. We may even hit it tomorrow. The only, I mean, oil is going down now, and the US dollar yen trade is still continuing to go. So I can't even imagine if oil gets a rebound how much higher the US dollar yen is going to go in a very short amount of time. If you look at it, if we go back to, this is May 24th, okay, we were trading at 126.36, and now we're 2 months later, not even full 2 months later, at July 14th, and we're trading at 138.74. So once again, 138.74 all the way down to 126. It's a $12 rally in just, 6 weeks. That's a lot of momentum to the upside, and it was being fueled by the oil rally and the interest rate rally. But now, because there's such an accelerated tone in the interest rate fundamental of the currency pricing, I think that's why you're really getting this supported trend to the upside when it comes to the US dollar yen. And we had a 130 mark. You see that orange line there on the chart. That's where the Japanese really would like their currency to be or lower, and they're not doing anything to do that, which they said they were going to, and they have done next to nothing. except talk, which is not typically the way the Japanese operate. Like, I've known some people over in Japan and done business with them since I've had my company, and even before that. When they say they're doing something or whatever, they're pretty much on. I mean, on. This is really, really odd to me that they have not pulled the trigger to do anything to defend their currency. And this is the thing, is that's why we need to stop raising rates in our country. We need to let the markets balance out. For one, we've already accelerated things way too quickly on our end. The dollar, I'm all about a strong dollar, but in this kind of environment, what we're doing, that the impacts of a strong dollar on countries globally and our trading partners, it's not gonna look good for the economy. It's definitely gonna have a trickle down negative effect. So, but all right, so as far as corrections, if we pull back, we need a failure of 134.82 just to put us on a neutral campaign, and even still then, it's just a wide neutral trade. I think 130, we're going to stay way above that for a while. Maybe we come down towards this 130, 151 area to test that. If we were to have some Japanese Bank of Japan intervention, if you will, I don't know why they haven't done it. I'm like, if you look at my past videos, I even said don't think that they wouldn't come out in the middle of the night, and just do a rate hike, whatever, just to, help shore up their currency. And this was months ago, and they never did. And now at these levels, it's like, well, okay, how much more of a depreciation do you want in your currency? I think maybe, excuse me, in the short run, to clear inventories that may have been built up in Japan. Maybe that's why they're doing it, to make sure that everything gets sold and shipped out, and then once that happens, that they can, when they get on more of a normal supply chain trend again, that they'll probably then defend their currency, because right now maybe that's the best way they can do to keep things accelerated, at least on the economic forefront there. All right, so we don't have any questions on YouTube or Twitch, but we do have a couple more people that have chimed in here with a little like. We appreciate that. All right, now let's go to the Australian dollar, US dollar. This one probing new lows, just like all the other currencies, still lower on the day, but obviously not so much. This one we're bearish. This, like the pound, though, I think it does have the capacity to get a decent upside correction. If we did pull off some sort of rally, like right now we have a decent slope here for this trend. Now by attrition, we will go out of this by next week unless we continue lower. And if we rally, well then I think that the extreme will be as a 69.32 to 69.94 area. I think unless we have a whole basket of currencies correcting simultaneously, I don't see us getting above that 69.94 area. The 70.66 area, I think if we do have a broad-based turn against the dollar, then that'll be supported. But otherwise, I believe that the trend with the dollar strength is going to remain. But along the way, we could have a little divergence, which will slow down. You notice that the dollar index is just slowly making new highs, and that's because they're grinding new lows now. They're not pounding new lows, no pun intended. And also, it's the euro that's really dragging things the most. It's the biggest weight. So now we have to see how things continue. I don't see things slowing down. Even if we have a correction, I think volatility is going to stay. And I do believe the trend's going to remain intact as well. Any bounce right now, I view as a correction. There will be a time when the dollar will turn, and when it does, boy, I don't know. That's going to be a fun ride it'll be a fun ride for traders. I don't think it's going to be a fun ride in the economy, just by the way that they're stretching things right now. Remember, there's an elasticity effect. It's a little longer. You have these pressures going out, whether it's a bubble or what have you. Then you come back to some median. When you do that, it's a violent, typical move. And remember, markets tend to go out like they come in. So the more we've accelerated this stuff, the more likely the reversal, the repercussions will come back quickly. Like when the dollar turns, I don't think you're just going to be buying these other currencies and selling the dollar, depending on what pair you're doing. in a sense that you're looking for a short-term trade, the next time we have a really big turn in the dollar, it could be something where it lasts for not just months but for years. And then when it turns also, I believe you're going to have a really sharp, like right off the bat, 10 to 15% correction that we'll probably never bounce back from in any time soon. Like where we would hit that level, consolidate a little bit, but really don't get very much of a rally, and then they'll just have the floor ripped out again, you know, and then maybe find some stability. But when we do turn, the dollar, we're not in good shape here in the United States, and I keep telling people that it's not that the dollar is strong. It's that these other currencies are that weak. So the question is can they shore themselves up or find a bottom? And when they do, well, then that's when we'll be talking about dollar bears. So, and that'll be fun, believe it or not. I think we'll have a wild ride with that. It'll be a crazy trade, and we'll be able to capitalize that in a big way. All right, so we have no currency. We have no questions there. We have 3 people on Discord now. Hi, guys. You got that free link for the book. All right, cool. That's all good. Let's just double check something here. Okay, that's that. That's that. All right. Okay. So we have a little action here. I'm looking at the platform here. The dollar is definitely falling back on its heels a little bit right now. The yen is still staying pretty positive. The Swiss definitely has retreated a bit. So has the euro and the pound, which we were just talking about. So in the midst of our little spiel from the yen to the Australian dollar, the euro has definitely come back for quite the pullback. It's just below its highs of the day. The Swiss, it's pulled back as well, but yes, you do hear me firing off some trades here. All right. Hourly here. There's that. There's that. And then here we go. Alright. And that's that. Okay. Alright. Alright, there we go. Just had to adjust some stuff here. Now the yen is still staying nice and strong here. We like that one. Okay, all right, there we go. Not so bad. All right, cool. All right, so Australian dollar, US dollar. If we take out this downward sloping resistance line, which is definitely keeping a nice trend intact, we're making lower move lows and lower move highs. We could get a neutral to higher trade up towards the 69.32. I think 69.94 will cap any upside movement. Now this is one where, like I told you, we could have some divergence. There's a possibility where you would especially see the New Zealand, which we get into next, continue to make new lows while the Australian dollar could be making highs. I think that even with the European sector, you could have the euro and the Swiss falling to the dollar, while you'll have a rally in the pound dollar and the Australian dollar while these other currencies are falling to the dollar. That type of scenario, upside correction type of thing, I could see happening and still maintaining those bear trends, but those would be the markets where I think you have the highest potential to see a bounce. Let's see. Had to update that, and we're all good. Okay, sorry folks, just wanted to make sure things are right here, and they are. Okay, all right, so as far as what would be the factors to drive the Australian dollar to support a nice correction or even just a neutral trade, their central bank is a little bit more on par with the U.S. Fed. They're ahead of the other central banks around the world, and I believe that's another reason why that, just like the Bank of England, because they are doing something, not as aggressively, but still aggressively, that's where you can get this bounce and this turn. So it wouldn't surprise me that as we head towards the Fed meeting, that we stay neutral in the pound and also the Australian dollar, and maybe start to get a little corrective rally going into that Fed meeting until we juice the rate 3/4 to a full point. At that point, I would say that you might see an erroneous spike to the upside and then finish that correction and then see the bear market resume, because once we raise the rate, it'll be all about the reaction of those central banks and those relative countries. Should they react in a way that follows through, well, then those neutral to higher tendencies for those markets may persist, once again weakening these other currencies. So I think there's going to be a good trade where if you look at the Australian dollar over the next month and a half, that you might start to see strength build versus other currencies. So let's just say that we're neutral, and I'll show you what I mean by this. We'll keep the Aussie as the top currency. Australian dollar versus the euro. Look at that. The euro, we know, is going towards parity. This is where we get back to that dollar index trade, where it'll probably continue to go higher, the index itself, but we're going to have a little bit of divergence in currencies. So here's a good trade, especially if you're not really certain about the Aussie US. Well, if the trend remains bearish in the euro US dollar and the Aussie just isn't as bearish or remotely neutral to correcting, well, we have a lot of upside potential here for the Australian dollar euro. And the reason I'm bringing this up is because we've taken out the bearish trend. We've already successfully been making lower move lows, lower move highs. We breached this downward sloping resistance, keeping the channel intact, and now we're flirting with the high. This high was 67.69. This high is 67.69. Oh, wait a minute, we're not flirting with it. We hit a double top today. Okay, this is significant. Once again, this is why I always tell people the best gauge of the market is the markets themselves, the best indicators. And especially with currency pairings, you can use those trends in other pairings to give you a guide in something like this. So without even looking at the chart before, just knowing where we're at on a daily basis with these other currencies, it would just be rational that this trade would be right now a short-term bull. It's been consolidating the last couple of days just like it has in those other pairs, and then look at today. It spiked. It spiked all the way to a double top. Well, this is telling me that right now it's just a matter of time. Like before, when we came off this lower move low to make this lower move high, we were following the trend. It was pretty strong. In this case, we're coming off a lower move high. We just double topped against this last lower move high. So that right there has us on the neutral campaign, and if we take it out, well, that takes us back to the original bull. So remember that this market has been correcting for a while, but if you go all the way back to here, this market's a bull. So, and it's kind of wedging, or was wedging, and guess what? It broke out. You can see that. And this is how good trend analysis, you know that where if we breach this up here, well, that's a pretty good buy signal to the upside. Will we be making major trends to the upside with this one? I would say that as long as the euro, the Australian dollar is pretty neutral with the dollar, and even if it's going down just a little bit, as the euro starts to get to parity and below parity, that you're going to see this trend continue, and you're going to definitely, well, not definitely, but have a very likely chance of taking out this high that was set back in April of 2022. So we can make new monthly highs and new yearly highs within a period of, remember I said that odds are pretty good that we'll see the euro down at 95 cents before the summer is over. If that's the case, that would put this up here, maybe not all the way up here, but somewhere around the 68.5 area. So let me see if there's any of you guys got any questions about this out there. We got some people on YouTube viewing us and on Twitch. No questions. All right, that's all good. So thank you for the likes. So anyhow, with this one here, this is a way of finding the trend. We know that it's very, very likely that it will continue. So how do you trade this? Well, the way to trade this one right now is that especially when the euro gets like a little bit of a rally going on, and for instance, if the Australian dollar is laying on support, that will be a time to look to buy into this market for when the euro falls back on its lows, and then perhaps the Australian dollar either stays where it's at or doesn't break as much or even rallies. So so that would be the scenario that I would look for, and we'll be watching this trade because this is just a great way to look at trends, you know. So all right, let's look at the New Zealand dollar. And speaking of divergence, this one made a lower move low as well today. Not shoring up though as well as the other ones are. It doesn't seem to have the mustard to build this trade up. Now this is the one where you see this slope here. It's pretty nice, just like the Australian, keeping a nice pretty much 45-degree angle slope. I do believe that you could see this continue. I don't see why there wouldn't be any reason to believe that this wouldn't continue. So the stance politically with as far as lockdowns, like COVID is starting to rear its heels here. Because it's an election year, you're not getting quite the explosive narrative that you normally are used to. Wait until after the election. I guarantee you it will raise its heels once again. These lockdowns in New Zealand are really retarding the economy there. Their debt levels are escalating. Like when I talked to you about how Europe has its problems, the problems is an understatement for New Zealand. So, and as long as that continues, and this is another one too, like AUD, NZD. Oops, that didn't work. AUD, NZD. Pretty neutral, but in an overall bullish trend. I would be mindful of this chart as well. If this maintains its bullishness, odds are very likely that you're going to see the New Zealand dollar continue to batter support. This will be another case where, like I said, as the euro collapses, the yen collapses, the New Zealand dollar is going to collapse as well. So, and when I say collapse, this is what's going on here, folks. Like, you don't understand the acceleration of what's going on. The velocity of money is slowing down at such a huge rate. If it trickles into Europe like it already is now to a greater extent and throughout the rest of the EU, well, what happens as this spreads to Africa and South America? It already is there, but it will be compounded in such a huge way that it will be an accelerated trade. And once again, it will have this divergence where the dollar index will continue to inch higher, and except for when you do have like the pound and the Aussie actually fall back against the dollar, that's when you'll see like the really big spikes, you know. So, and I'm hoping that these other countries around the world, raising rates is not the right thing to do, but right now, since we are, they have to, and if they don't, they're not protecting their currencies, and it's not helping the whole world either. We need that balance. It's very, very important. All right. Now let's look at the US dollar, or sorry, let's go back to the New Zealand dollar, US dollar. All right, so as far as upside corrections here, the 60 yellow line, 63.37, this is about all I think you could muster up. I don't even see us remotely getting there, but if we were to get a turn of events, then it's possible. More likely than anything, we're going to see this market. We're at 61.21 right now. I wouldn't doubt it that we make new lows again tomorrow and continue to trend lower into next week. We could get down to, I think, the 60-cent level sometime next week. And also, I wouldn't doubt that we couldn't reach the 58.5, 58.80 area probably within the next month. That's not the biggest call to the downside. It is pressing these lows, that's for sure. But like I said, unless there's a big turnover in leadership and the people start to acknowledge that they need to change things back, I don't see this that happening. So we'll be monitoring this one as far as trying to. If you have a buy signal, good luck with it. You are taking a counter trend trade against a force. Think about like an unstoppable force. Like right now, indicators are getting buried. That's why I showed you the example of using other markets as an indicator. They're always in real time. They're also the best indication of what's really going on as well, and they're not lagging. And right now, all indicators are oversold for all of these markets. So what do? I mean, it doesn't take much of a correction to give you a buy signal. The question is how long will it last? Most of these markets, they can't sustain a trade against the dollar for more than $2, 2 days. You know, usually it's half a session. Like I mean, right now you can see dollar strength is waning on the day, but this is what's been happening every day. The dollar is up, and then we going into our morning, and then all of a sudden we get even the bad news, and then all of a sudden it's a profit-taking move. It's just a profit-taking move before the big money comes back in and hammers these currencies, other currency pairs. So be mindful of that. Don't try and catch a falling knife. Now let's look at the U.S. dollar Canada. This one has been nothing but a headache. Broke out to the upside today, baby, pushing this trend. You know, it is just grinding higher. Like, look at this on a monthly basis. You want to talk about a headache and a half. Until today, which really extended the trade from the last couple sessions, we've been just buffering against highs, falling back. You know, I mean, as soon as you make new highs, it just has such a range that it pulls back. Making higher move lows, that's for sure, but not in any extreme way to the upside. Today actually was the biggest breakout as far as peaking. So I mean, we were in around 130.82, and we got all the way up to 132.19. It's over $1, almost $1.50 move today, above and that much above the highs. That's what's crazy of it, you know. So they're pushing the upper end of the range. The trend is intact. It's a big neutral to higher trade. I'd be careful. It's a buy dip opportunity. But as far as really catching, I mean, today was an erroneous spike. Look at the volatility in the Canada today. Relative to the other currencies, the Canadian pair is definitely a big currency. However, it doesn't typically outpace these other currencies in range on big numbers days. It's usually the opposite. So that's pretty interesting that they were able to accelerate a high. I think you had a lot of weak shorts that were blown through there. I wouldn't doubt that it's a big algo spike. Trend is your friend, but it doesn't, even though it has these big bursts to the upside, they don't maintain. So I wouldn't doubt that you see a sideways trade to lower trade develop over the rest of today's session, and then we'll have something happen off of the retail sales number, I'm sure, tomorrow. So we've raised our breakout. When we had the breakout level there, we were looking for it to get up to maybe 131.25, 131.40, going all the way up to 132.21 like it did today. That's an exacerbated move. So let's see, is there anybody out there that's trading the U.S. dollar Canada? Let's see, we got only a few viewers out there. Everybody's out to lunch. That's why I don't like doing this lunchtime video. We should have waited until this afternoon. So, all right, probably will do one later anyhow. So anyhow, U.S. dollar Canada, not much to say on this one. Obviously, the trend is your friend. I would be cautious. A failure from $1.2937 sets us up for a breakdown into this area. Because of the strength that's in place right now, I don't see it getting much lower than this. This would probably be a very good buying area. Remember, overall, this market isn't a bull trend. However, the momentum to the upside has been very strong for the last month and a half, especially. I would use caution with that right now. And look for points to buy and be very careful selling into this thing, because it had been just buffering, barely breaching resistance, and then coming back, giving you. Range traders have been doing well, I'm sure, with this market until a day like today, which has got them, I'm sure, very flustered. All right, so let's get to some cryptos here. We got the BTC USD. All right. And you know what we didn't do? Since we're out there, let's make sure. All right. Just checking out for some questions here on some of these other streams. We stream to Mob Crush. We stream to YouTube, Twitch, Discord, Mob Crush, Mixer. Then there's also one that we go through that vents us out to. I don't even know what these things are. They're not even our accounts. They just go and they're somehow fed out into internet land, whatever. And the nice thing is it has been expanding our following. We got some very nice reactions to a lot of things, the webinars that we've done recently, special topic, and also the interactions too. We've had a lot of fantastic interactions with traders as of late. Today I think everybody's taking the day off. Maybe I should go to the range and hit golf balls. Oh wait, that's right, that's what I'm going to do after this. So get ready for my day tomorrow on the course. Alright, so we're back here. Alright, BTC USD. Because the dollar now is under a little strain, you can see that the Bitcoin was lower, earlier today. I got to stretch. I haven't gotten my exercise yet outside. So because the dollar is under pressure right now, currently Bitcoin's getting a rally. There's almost like a real inverse relationship now between the dollar and Bitcoin. And Bitcoin seems to go as the dollar strength is there and gold gets weaker and stocks get weaker and interest rates are going higher, Bitcoin seems to go lower. Interesting that it's supposed to be a hedge for inflation, but for some reason someone forgot to let the cryptocurrencies know that that's what they're supposed to be. You know, at least that was what they were touted as. So right now I think you have some other cryptos that you might want to look into more about trading, which would be like the Ethereum and Monero, which we'll get to. Bitcoin, we set a nice higher move low yesterday. We're just grinding higher, but no matter what, it's on a corrective move over the past month, you know. So whereas the overall trend is a bear, you know, we can't really say that we're bouncing here. We're going sideways to slightly higher, and I think if anything, you're just plateauing, setting up your next one of these. So, and I would use caution when we start to get a rally that looks like it's going to take out this 22,500, and then all of a sudden it goes south, and it goes south in a big way. Now, do I think that all of them are going to crash or anything like that? No, not necessarily, but I think Bitcoin does have a lot more to go to the downside. I wouldn't doubt that if we take out this trend line here, that we'll take out this low that we set back in June and get down to probably 14,000, 13,500, somewhere in there. I probably would say that 12,000-ish would be the short-term bottom where you would find a lot of support. One of the things you really got to key off, I think, is the market that's really moving Bitcoin. We had our buy signal. Yay! We didn't get one in Bitcoin, but we got one in Ethereum. The question is, does the dog wag the tail or the tail wag the dog? Well, I think that the tail wags the dog. I believe that Bitcoin is not quite the equivalent dollar index for the industry. On so many levels, I just think the price structure is overly inflated and has no real potential to rebound. Ethereum, however, has a very viable technology that has some longevity and usefulness. At these levels, it's a great deal. Where it was at higher earlier in the year, it gets a little bit tough. Anything over 3,000, it's not really, the technology value isn't there anymore. In fact, it's long gone, actually. But right now it is a tradable market on multiple mediums, and we have a buy signal that occurred yesterday. We have follow through today. Like I said, this one is not the one that leads the curve. Let's go back to the BTC USD. So yesterday we made a higher move low. Today, see how the volume is? Look at they shot their wad yesterday. It's basically unchanged on the day. Here, settled on its highs, still not that big of a range, but a little bit bigger, and it's underneath the highs, really pushing it. Could we get a breakout further to the upside? Well, we're coming off a higher move low. We should at least come up to try and challenge this high here. Now, if it is just a slightly higher to higher trade, then I believe that we're not going to get that far. So 12,079, maybe we get up to 13.5, 14,000 tops on a spike. I guess 1,400 rather on a spike. Overall, even this is in a bear market, so even though we're kind of making higher move highs and higher move lows, it's more of a holding pattern, and still has to be viewed as a correction. We haven't taken any out significant highs to really justify us really becoming a bull for this market. All right, now let's look at the XMR US dollar. All right, we got some people, more people watching on YouTube again. Thank you for joining us, and on Twitch. Hey, first time chat viewer. Lay Trader Do 50. Hello, do you doing live trading? I do actually have live trading going on. I'm not showing you because that's out of compliance sake. It's illegal to do so actually. Yeah, I do have trades going on right now. For compliance sake, I always tell people that what I'm doing. I've been short the euro going into today, the euro US dollar, the pound US dollar. I've been long the US dollar yen for almost a year basically, and also I'm long the US dollar Swiss. So yes, I am trading on the day, and so far it has been a pretty decent day after all. Who would have thought the PPI was going to come out anything different than it did, you know? So that was kind of a no-brainer on that one. Trend is your friend, baby, without a doubt. That is faux show. So let's see, and that's holding up. Yeah, we're going to add to that one. And then this one, we're going to add to that one. And remember, there's a lag here. I'm not trying to instigate anyone to do anything. I have my orders in place, my stops in place. So. All right, cool. So anyhow, yeah, back to our question here, viewer here. Yes, I am doing live trading, just not showing you exactly what I'm doing. But we are doing analysis here to find out where there's trading opportunities, what your risk levels are, and what your targets are. So if you just joined us, if you have any questions about any markets, even though if we've covered them, the markets are moving. So this is all in real time with only a slight lag with the streaming. Because remember, we have data coming into us, and then we're streaming out to our streaming thing, which then goes out to multiple venues like YouTube and Twitch, whichever one, or Discord. Which, by the way, I forgot to see. Okay, we got 2 people still on there. And all right, so by the way, first time viewer here, we do have this book for you, How to Day Trade for a Living, for free. Costs you nothing. It's just a downloadable PDF. All right, XMR and Monero. We're going to go through this one. We've been looking at this one. It's been doing the same kind of squirrely rally like Ethereum and Bitcoin have, but a little bit better. We like Monero. It isn't a bear trend. This one, I think you may see some divergence overall in the longer term, where Monero is going to continue to gravitate. Is it going to skyrocket to thousands of dollars? No, I don't think so. It's pretty much a buy from 160, 180 up to 200, 20, 30 area, and then a sell from like 280 to 350 area. And that's kind of like a range where you can look to buy and sell, I would say. There's value in the technology. It's already being used. It's used for all kinds of, things globally. Doesn't seem like the technology is under pressure to go away or be replaced. Now, does it have long-term sustainability? Well, I don't think any of them do because of quantum computing, but no matter what, at least in the short run, we do. And since it is being used, this is one where I can see there is value just because of its usage sake. Everyone raves about blockchain technology for Bitcoin and everything, but you tell me who's using Bitcoin technology for their business. Tell me. I don't know. someone, if you know on the chat, tell me who is using Bitcoin for business. As a means of exchange, yes. As a hedge against inflation, there are people that have done that as well. I don't think it's working out so well for them. So as an investment or what have you, so those things it may be, but as far as technology that's being used, no, it's not. Now it is in the capacity the Ethereum is running on through it, and in that case it is. So, but then it's replaceable, and it is hackable also. So that's another thing where its value is diminished, I think, greatly over the past 6 months especially. So I'm not poo-pooing these things. I'm just saying you got to be realistic that all technologies come and go. So, and if it wasn't, I think, for the pandemic, and supply chain issues that are going on, we would be really racing forward into quantum computing already. And why not? I mean, it's here. There's no reason not for it to be implemented. And when it does come online, I think it's going to be amazing what it does. Now, are some of these cryptocurrencies going to last? It's amazing as we're talking. Monero is going up, 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 up. There we go, Monero. It's good technology. We'll see. I think that you will have an adaptability factor for some of them, but most of them, no. I don't know in what world Dogecoin is going to continue to last as a technology moving into the future very long. I think its sustainability factor is one of the biggest decays it has in its pricing to begin with. Monero, could that be upgraded? Possibly. I believe that I don't know the technical programming parts of how it is upgraded to something like that, but it's my understanding that Monero can evolve into that world. Ethereum can evolve into that world. Bitcoin, yeah, it can, but it opens up to where Bitcoin becomes. It's not going to be like Dogecoin, but it definitely doesn't have the sustainability factor, the usability factor. But then who knows? Technologies change. Maybe something new comes out that just radically makes it where it has a value. So, but anyhow, that's Monero. And since we brought up the Doge, let's see what's going on in the Doge. Yeah, while these other ones are making a move to the upside, the Doge, it made a lower move low yesterday, and it's not looking so good today either. So I would say that this one is going to continue its bear trend. If you can get a few pennies for what you got right now, or maybe it doesn't matter at this point anymore. Now it's just a lottery ticket that you're hoping would get some bounce. Maybe somehow there's a run up from 6 cents to $1. I doubt it. I can't see how that would happen. The only thing that I could see would do that is if they did some kind of big meme propaganda marketing push to get people to buy it. For what reason, I don't know. And maybe get some big names and celebrities behind it to buy it for some reason. In that case, I would say it'll be a pump and dump. Get out of it as soon as you can. However, I don't think you're going to get the opportunity. This is a bear market that I just do not see ending at all. Period. Just don't. I wouldn't doubt that 6 months from now we'll be looking at Dogecoin at 2 cents or less, and eventually it's going to be under a penny. Getting into the micro amounts, and then that'll be where we're pretty much at. So maybe out of some stupid some capacity, as long as it does exist, maybe it gets to such a low level that it does become somewhat like a penny stock tradable thing, but it's still a false market. It has no sustainability as far as a coin is concerned. It just has had a lot of marketing and talk behind it. That's it. So, all right. So, by the way, if you have not hit that subscribe or like button, please do so out there. Let's go see what the Euro US dollar is doing. So the Euro US dollar, which had come back and was trying to make new highs on the day, failed to do so. So we have the euro now a little bit lower than when we started this webinar. Let's see, the pound still, yeah, that's a little bit lower. The yen, It's back towards its highs, and so is the U.S. dollar. Swiss is doing all right too. Okay, not too bad. So yeah, right now we're in this sleepy lunchtime trade. I wouldn't doubt it if you still see the dollar get hacked up a little bit yet today. But then watch out for that 2 o'clock bond close. It's almost like clockwork that not that it's going to for sure happen, but we have this retail sales number coming out tomorrow, and it's very likely that we're going to see U.S. dollar strength come back going into the European trade, Asian and European market trading hours. So, and I think you're going to get a little lead on it. So right now what we have is profit taking against the dollar, and then all your weak bulls our dollar bears are going to most likely get squeezed overnight into tomorrow's trading. Numbers going to come out. I wouldn't doubt that the dollar makes a new high and then falls back again and trades lower like it's been doing the last 2 days after it makes new lows, and then you have a profit taken move, meaning that like a euro US dollar will get down lower and it'll look like it is now, come back towards its highs, and then be careful going into the close for tomorrow afternoon. We have a lot of stuff that's going to happen this weekend. There's the first of all, 3 economic numbers that are shocking the news right now. CPI's been nothing but tossed around in the news for yesterday. You know that over the weekend, all these big talk shows and pundits will be talking about the implications of what's going on. And then it's coupled with the PPI number that also came out so bad. Retail sales, if it came out good, no one's going to believe it for one. So, I mean, and they'll just be talking about, oh, what a surprise on the news. Probably just a spike. I don't think anyone would ever equate right now, if the number came out positive, that things are turning around. It's a sign that the economy is going to be fine over the next couple months, because guess what? In America, it may be decent. We're not running at the inflation like everyone else is, and that's because of the buying power of the dollar, and we're buying more foreign goods again. That's not going to last. When the dollar turns, these goods become more expensive, our choices are already limited, and then all of a sudden we're going to see even higher inflation. Once again, raising rates doesn't curb inflation, it causes inflation. So, but that's why they call it economic theory. One day they'll say, oh, well, there was these factors that's why it didn't work. So right now we're looking at the euro. Let's take a look at the hourly. Yep, we did not make a new high here. We tried to. We made nice lows here. Last hour we got just shy of that. Now I would use caution. We could probably flirt with this high right here at around parity half here. That's very possible. I would still use caution with this. I wouldn't be very leery about buying into any sign of strength right now. Overall, this market is making lower move lows, lower move highs. It's trending lower on the long-term, intermediate term, short-term, hourly. Don't try and catch a falling knife. If anything, look for rallies to sell. It's a sell rally forecast. So, and it's very important that you be mindful of this as well. So, all right. So, by the way, for those of you that are, if you just tuned in, we have a link here on in the chat in both YouTube, Twitch, and Discord for a book called How to Day Trade for a Living. It's a free PDF. It's a book that you can buy on Amazon. It's a good book. It's for beginning intermediate traders and even long-term traders such as myself. There's always something that either reminds you or jogs a memory, or even gives you a new perspective on something that that's older, you know, that you already know. Every time I review things, there's things I still learn things from classical bar charting stuff that I was just like, oh my gosh, I've been using this for 30-some years and I never ever realized this, you know, or things that work sometimes don't work all the time, and now in this environment there's things that are working that haven't worked in a long time. So that's why reviewing these things and being aware of them, having them in your trading arsenal is great, and you'd be surprised how some of the most basic of techniques truly yield some of the best trades, you know. Speaking of that, if you go to our YouTube channel, by the way, we just put out we've been putting out shorts. These things have taken off. I couldn't believe it. Just the ones we put out yesterday with this one here, 3 factors that increase strength of a chart pattern. This is one that I think you are going to like. So we're going to get the share thing here. And if you can do this when you're out here looking at our videos on YouTube, Forex Trading Unlocked, do us a favor and, you know, when you look at it, hit the tweet button, the share button, and spread the word about us. We would really greatly appreciate it. And now I'm going to pass this link on to you. So yeah, if you check out our channel, Forex Trading Unlocked on YouTube, we have shorts, we have all kinds of uploads, we have different playlists, we have one with eoption.com. These are all option trading strategies, which can be used also for binary options and also when you're trading, believe it or not, the FX markets. So let me put this link out for you guys, and for those of you, if you haven't done so, please hit that subscribe and like button for us giving you this little bit of information and extra learning here for you. So I'm got it now on Twitch and on YouTube. Now I'm getting to Discord here. Hey Gary on Discord, you're still hanging in there, aren't you? You're one of our favorites here. Alright, cool. Alright, so there is the link for you guys. If you haven't already checked out the book, How to Day Trade for a Living, definitely check out this short little video. It's only 1 minute long, but it covers 3 very basic points that you can integrate. I don't care what your system is, what patterns you use, or methodology. These 3 points can be integrated into everyone's thing. And maybe you know them all already, maybe you know one of them, but it also reinforces that these very basic principles are some of the most powerful things that you can use in your war chest. So not just my opinion, it's my experience that that's why I'm saying this to you. So all right, hourly basis still looking weak. I think the euro here, as you can see, is having trouble and most likely is going to fall back on support as we move through the day. All right, British pound, US dollar. Once again, this thing is hovering near its lows again. We're loving this trade, I have to say. You can't make this up with these economic numbers. Like, I've been trading the bonds for 30 years, and they move now in ways that they've never done and swing around on a daily basis that would take weeks, definitely days. And one of the best ways to trade the interest rate markets in the U.S. is using the foreign currencies. One, you have better liquidity. You have you're live trading from Sunday evening all the way through Friday afternoon, no interrupted breaks. You do have an interest rate, but you don't have any expirations, and the expirations themselves become a headache and a half when it comes to futures. So I get it, I understand why they're there, and there is a reason for them, but they even as a futures guy, it's just sort of like, oh God, it's rollover. You got to make sure you get your dates right and your numbers right, because you make stupid mistakes that you're just like, okay, what is this, my first day trading, you know? So, but you don't have with those issues. Every market has its little nuances and issues you got to deal with, but you don't have those kinds of problems. All right, British pound, US dollar looking good on the daily basis here, hitting these lows again, and we added some fresh shorts after that bounce. That worked. We had a nice little pick off on the lows today. Took a little profit. So I don't know. I know that I had a profit-taking rally that just occurred here, and now I'm back on adding to the sales and buys here. Looks like it's going to be all right. Yeah, I think that as we head into 2 o'clock, yeah, we're going to bobble where we're at, and then we're going to hit the lows again. Now, I don't think we're going to pound new lows necessarily on the daily basis, but I wouldn't doubt that we hang near them. Kind of have a little bounce in the later afternoon after the U.S. markets are closed, and then once Asia opens up, I would expect that you're going to see a follow through with their markets and a reaction to our markets, meaning that dollar strength will come back, and you'll probably get new lows in both the pound US dollar we're looking at now, the euro US dollar, and then we'll see rallies in the US dollar Swiss and the US dollar yen. Remember that the euro is already on the parity line. The Swiss has a couple bucks to get back up there, and that could be a vacuum move to the upside. Especially, it could also be one of those weekend trades. Like I said, we're setting ourselves up for an overnight weekend trade where we're going to have a gap. I wouldn't doubt that from Friday to Monday's trading, you're going to see an accelerated move in strength in the dollar. And just the speak alone is got to have all people talking all over the world, I guarantee you, because this is it's not the end of the world, but I'll tell you what, it's not the end of this trend with these numbers. It's not the beginning, it's already started. But it's definitely not even in the middle either. We are just in the beginning stages of these numbers. And as they compound each other and what have you, we are going to accelerate these trends, which is beautiful for us so we can make more money, right? So once again, bearish to pound US dollar. Don't try and catch a falling knife. US dollar Swiss, let's see what this is doing. Remember, we hit some key resistance over the past couple of days in the Swissy. Tried to back off as much as it could, and look at it today. Now once again we're getting it back above that 98.45 area, and we're going to look probably to flirt with the highs once again with this market as well. This, like I said, I don't doubt that we're going to see the US dollar Swiss back at testing parity again. I would be stunned if this market was to truly turn south and become a bear. Just not that it can't happen, but I believe truly that we will go for one more test of parity at least, and then bobble around there most likely. So good opportunity still to the upside. You look at we're trading right now at 98.5. You've got a good $1.50 to go to parity, and I think that if we can get to parity again, it's like 3 times a charm. You know, we're coming off of a lower move high and a lower move low, which then we would accelerate to a higher move high, which the overall long-term trend is bullish. Remember, it's not like we have this long neutral trend that we're in. We're just in a sideways to lower trade over the past 2 months. Otherwise, we're an overall bull trend, you know. So, and this thing has tried to beat itself down. Maybe we touch parity and fall back on support like this again. We had these really exacerbated sell-offs, but like I said, I know that if you were paying attention earlier in the webinar, or not paying attention if you were around, the Swiss, they've been already actively working to somewhat protect their currency. So the question is, will they come in and intervene when we get to parity again? And that will be interesting too. So I think you're going to have this accelerated rally over the next week or so, especially with this weekend trade, going up towards parity. And then the question is, will the Swiss do something about it? Right now, I don't hear any rumblings. When I do, I will be one of the first ones to talk about it with you here on the internet. That is for sure, as we're streaming out, trying to figure out what's going on in the markets. All right, hey, we got another like on YouTube. Thank you very much, guys. Hopefully you hit that subscribe button too, and maybe you like that book and also that video, by the way. So, all right, so once and again, US dollar Swiss, we're looking for this to maintain its bullish posture, buy dip scenario. US dollar yen, baby, we're back towards those highs, but we weren't that much lower than we are now when we started the webinar, but we were pulling back a little bit, and now it looks like strength is prevailing going into the Asian session. Look out, baby, 140, that's a price target we've had. We are just inches away. I mean, we're less than $2 away from it right now, and at the rate that this thing's moving up to the upside, we could easily be there through tomorrow's number. I mean, I don't think it would happen today that we're going to get any type of accelerated move, but I wouldn't it wouldn't be a doubtful thing to happen really tomorrow for that to be there. Boy, I'm getting tongue-tied here, so I gotta get some food. I mean, I haven't had lunch yet. I haven't had breakfast either, so that's why my mouth is so dry too. So, but 140, like I said, is a very viable target. And if any of you know anything about ABC corrections or ABCD targeting, if you will, for trends, my boys at TFNN were talking about this one this morning because they like my I have the TFNN, the Tiger Forex Report newsletter that we've been putting out now for the past couple of weeks, which you can get right now off of TFNN.com at a grandfathered price as well. Reduced. So my target was been 140, and everyone on TFNN knows that for a while. Now that we've gotten to these levels and we're coming to that 140 area, my boys have been really watching this one because they're like, wow, Teddy was calling for this, but and it's happening sooner than later. You can't make up this acceleration of these trends.
And that they were saying when they were doing their breakdown that they think the 140 is a very viable, not only a very viable target, that from the ABC projection to D, that it would put it actually up at 142. I do have 150 as a longer term target, as long as the Bank of Japan doesn't do anything and the bank and the finance ministry doesn't do anything. And it's not like their hands are tied; they're just I don't know why. They said they were going to do stuff and they have not done so. And until they do, 140 is just a stone's throw away, and 150 baby is also on the menu. So is it going to happen? I don't know. We'll see. But right now the trend is your friend. As long as things stay the same, why wouldn't we get more of the same results? So that's, remember, the definition of insanity is doing the same thing expecting a different result. You just keep doing the same thing, and right now I'll tell you what, the results I'm pretty happy with. So I was talking about that yesterday with the guys from TFNN. Like, for traders, you cannot. We live for these types of markets and these types of trending, environments, and you got to take it while it's here, because there are lulls. I'll never forget, after September 11th. Almost 4 years of flatline markets, it was really, really hard to make any type of money with no movement. Like, that's literally where, you got to have either a backup plan, or you better be smart with your capital and don't blow through it. Because you'd be surprised that, yeah, you can go 4 years with flatline markets. I mean, bad. It was bad. From 2001, end of 2001 through basically into 2005, it was very, very rough. Into 2000, yeah, basically things didn't really start swinging again until 2006, really, where you could start to, and that's even the currencies. Currencies were a really, really rough trade. And I'll tell you what, you weren't getting moves like this, like we've had from this low here of May 24th. Look at this. The low here was 126.36. The high today was 139.38. That's a 13 handle move that's June 4th, let's see, from May 24th to July 14th. We're not even 2 months away. We still have another week or 10 days to hit the 2-month mark, and that's a monstrous move. So think about that. This is happening all over the place right now. This was not, you would have one market that might trend over a year that might have some moves like this, but they didn't happen in less than 2 months. They happened over a period of 3, 4, 5, 6 months easily. Like, you may get half of that move, but you're not getting, and you wouldn't have like these kinds of radical upswings with these pullbacks and then come. This is just insanity what's going on here. I love it. It's a roller coaster. That's why I'm a trader. It's one of the best things about being a trader. But I have to say, this stuff doesn't last forever. Nothing does. Things will smooth out eventually. And at that point, then you got to be ready to, take what the market gives you. That's why one of the things I try and instill in all the people who follow me is that, opportunity is always there. How much or how little, you don't know from day to day. The question is, will you be there? So you got to remain disciplined with your money management, with your trading methodologies, and make sure that you can come back tomorrow. Because if you can't come back tomorrow to play, you're going to miss every single opportunity that happens, right? And you don't want that. You'd rather miss some opportunities now and wait when you're not sure whether you want to do something, or be ready when they do come, So, and also remember that these moves now, the expectations are very high because of the volatility. When volatility drops, I'm not looking to make, some of these trades now, it's like, I normally wouldn't be saying I'm looking to make 5, 6 to 10 basis handles on a currency trade. Well, yeah, as a long-term trend, yes, but not where I'm saying, well, I'm looking to do this over the next month, month and a half, something like that. That would be a position you put on for 3 to 4, 5, 6 months, sometimes at least, sometimes even a full year, so keep this in perspective. Eventually things will calm down, or maybe not. I don't know. If they stay like this the rest of my life, I'll tell you what, I'm going to be loving it. That's for sure. At least I'll be really engaged, because I'll tell you what, after a day like today and yesterday, I'm looking so forward to going to the driving range and hit some golf balls, which, by the way, is a great way to clear your head also. Hitting golf balls, it's amazing how therapeutic it can be. And then go practice my putting for about 45 minutes too. It's kind of nice out. It's only 73 degrees, 73 and sunny in Chicago at lunchtime. That's pretty nice weather, baby. All right, US dollar yen. We're going to finish up our review here. It is definitely pushing things in a nice way here. We're liking the way this trade is shaping up. We're going to continue to follow that one. Australian dollar, US dollar. Remember, this is the one that we're saying is expect some divergence. Don't expect it to really, it'll keep on falling to the dollar, but it'll bounce and hold up, and it doesn't have quite the woes, if you will, that certain currencies do. The political environment isn't healthy either. It's a lot like New Zealand, but it's the people are revolting. They're saying no to the mandates. They're saying no more, no more. They're relieving things that were imposed on them, and they're just like, yeah, this is not happening. It's not happening anymore. So, and I think that as they remove mandates, you're going to see more and more countries that do. Those are the ones you're going to see the divergence. Everyone that drops the COVID mandates, you're going to start to see things shore up there. The ones that press them, I think you're going to see their economies really get squeezed, because guess what? Locking down society, we already know what that does. If you didn't see it coming before it happened, I don't know. You have to understand what it does now, because guess what? You can't stop the world. You got to live. You got a choice. You can run and hide and slowly die, or you can face life and see what happens. Try and do the best you can, which is all any of us can do, and live. So live healthy. And happy, and enjoy every day you got, because it's a gift. So I'm not saying that you just go out there and be crazy either. And definitely take care of yourself. People who are compromised immune system, absolutely take care of yourself. I'm not saying COVID doesn't exist or anything like that. However, our reaction to dealing with COVID and living in fear, that doesn't help anything. So, and it's causing all this in the markets, by the way. Remember, the markets are an EKG. It's a biorhythm for the world. New Zealand dollar, once again, this one's in the hole. We're not liking this one. This one we think will continue its trend lower. Remember, this one we're looking to get down to definitely by the end of the year, that 55 cent area. It may even happen by the middle of the fall. Trend here is not looking good. I would use caution with this. And then you got the US dollar, Canadian dollar. I don't know how much rebounding this one's going to have, because this one's been grinding its highs. I think now today alone may have set the range for the next week and a half, flirting with resistance but falling off of it. I wouldn't doubt that you kind of get maybe a little bit of a rise and then a choppy trade like this to go sideways for a little bit here. So that's what we're looking at. One last look at the euro. Look at that. It's right in the middle of its range. Yeah, we're looking for this to definitely fall back on support later on today. Nice trade today, lots of activity. Not too many questions here on the chat boxes, but that's all right. We got lots of viewers. We got a bunch of likes. So, hey, you guys, make sure you check on the chat room here that we have this book for you, How to Day Trade for a Living, for free. It's a good book. Then also we have this little video, the 3 factors that increase the strength of chart patterns. This works across the board in all kinds of chart patterns. Good information. So, and with that being said, we want to remind you also to, if you have not done so, subscribe to our YouTube channel or our Twitch channel, Forex Trading Unlocked, and check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, written by yours truly. And also you can find out information about that if you go on our website, Forex Trading Unlocked. Also, we have a dedicated page. Google the title, High Probable Japanese Candlestick Patterns, and check it out. We've got videos on it, little reviews on it. There's little synopsises and other things. And by the way, if you are a Kindle Prime, not Kindle Prime, but whatever it is, yeah, you pay for the Kindles per month to use unlimited reading. Yeah, Kindle Unlimited. You can read the book for free. Well, you already paid for it, no matter how much you read, so it doesn't change a thing. So you can check it out there, see if you like it, and then we would definitely like it if you buy the hardcover edition. It is a full-color book, too, so most chartists and authors don't spend the time to do that at all. It's all black and white. We make sure that you get a very good visual representation, and we try and keep communication breakdown from occurring as much as possible. So with that being said, thank you again for your time here. I'm Teddy Keckstedt from Forex Trading Unlocked. Check us out at www.forex-trading-unlocked.com. We'll see you soon.